Hello and welcome. This is Business Incorporated live from Lagos. I'm Chimeze Obiwago. Nigeria's Finance Minister, Ms. Kemi Adeosun, today briefs the Senate on the state of the country's economy. And Zimbabwe's energy regulator turns down an application by the state-run power distributor to raise electricity tariff by nearly 50%. Plus, Tanzania secures a $7.6 billion loan from China's Export-Import Bank to build a railway line as part of its infrastructure development. Well, we'll begin with earnings report. Lufthansa has cut its full-year profit target following a sharp decline in long-haul bookings to Europe. Germany's biggest airline blamed terrorist attacks in Europe and greater political and economic uncertainty. It cut its full-year profit forecast for 2016 from slightly above previous year to below previous year. And German car maker Volkswagen has set aside another 2.2 billion euros in the first 6 months of the year in relation to its emissions scandal. Excluding the charge and other one-off items, the firm said its operating profit for the half year until the end of June was up 7% to 7.5 billion euros. The better-than-expected performance lifted the firm's shares by 4.6%. VW admitted last year to installing illegal software disguising the level of emissions from its diesel cars. And it's a bearish day for most European markets ahead of the ECB meeting. And just before now, the DAX was trading lower at 0.12%, CAC 40 down 0.37%, and FTSE 100 down 0.43%. Let's talk to my colleague out there at Frankfurt Stock Exchange, Ulrich Barth, for details on those numbers. Good afternoon, Ulrich. Now, European markets opened lower today ahead of ECB meeting.
Pleased to be with you.
You're welcome. Now, the market opened lower today ahead of ECB meeting. Are the markets concerned about what Mario Draghi and his team will deliver?
Yes, they are concerned. They are eagerly awaiting his response to the Brexit and to the Italian banking crisis. The first bit of news that came from the ECB came about 3/4 of an hour ago, and that was no change in rates. The central lending facility remains at 0.0%. For the Eurozone, if banks want money from the ECB, it's cheap still. If they want to park their money, they have to bring money with them because there's a negative interest rate of minus 0.4 on that. Not a surprise that everybody expected that. And I think most people are expecting that there won't be any change in other parts of monetary policy in order to compensate for possible damage from the Brexit. There was speculation about bond buying, maybe the program being extended or in some way being made easier for the ECB to buy certain bonds, which until now under regulations they could not buy. This in order to provide more money for the Euro system. I think the consensus is that it's just too early to tell what fallout from the Brexit will be. It's just about a month ago, it was June 23rd, now we have June 21, you know, there are lots of hypotheses about what it means for the economy, but nothing clear. But still, people will want to hear what Mario Draghi's assessment is, that of his team, and also what he says about the Italian banking crisis.
Now, I guess part of the impact of this Brexit issue also is affecting the earnings of some of the companies. We've seen more earning reports and forecasts coming in. Today, Lufthansa, Germany's biggest airline, has cut its full-year profit target. What are investors and the markets saying about this?
They're very surprised, and I would indeed use the word shock for this, because the Lufthansa share is plummeting. It's going down about 6-7%, and that's a lot for a member of the DAX in reaction to a news like this, profit warning. What is Lufthansa saying? It's saying that there will be fallout, and it's already seeing bookings, advanced bookings, retreating for European long-distance destinations, long European routes, that is, to clarify. And of course, that will have an effect on profits. And it seems that the effect on revenues and profits is quite significant, can be felt, and will lower the expectations for the year as a whole. It's serious news for Lufthansa. One didn't see this coming. One saw, yes, terrorist attacks, but one didn't see this kind of fallout, so it's bad news.
Now, another company that has remained in the news is Volkswagen. The company has set aside 2.2 billion euros in relation to its emissions scandal. Although the company reported positive 7.5 billion euro profits at first half, do you think this money set aside is going to have any impact on the company's second half of the year earnings?
I think so. I think that Volkswagen has to subtract this money for risk money set aside for legal costs from the actual profit it shows for the first half of the year. And of course, going on into the year, you can't really rule out that there won't be more legal costs that Volkswagen will have to set aside from profits made in the further course of the year. I think one can safely assume that with the months behind us, Volkswagen having made billions, it will continue to do so. Maybe not quite in the same dimension, we don't know that, but people will continue buying the vehicles and there will be a profit. The thing is, the risk assessment could just be higher for the second half of the year, because we just heard from 3 U.S. states which are filing lawsuits, and the press today in Germany is full of what Attorney General Schneiderman in New York has said. There's a picture of depicting emails that put the finger on certain executives at VW, and it certainly doesn't look and sound all that good. So this is probably not the last we'll hear from this.
Well, I guess, of course, it will not be the last we'll hear from this, and we hope to see the end of this crisis for VW very soon. Thank you very much for your time, Ulrich Bartz. And to Asia now, Japanese stocks have risen on bets the government will unveil a stimulus package that could be double the size initially expected. Prime Minister Shinzo Abe is looking to compile a package of at least 20 trillion yen. The world's third largest economy is still trying to emerge from deflation. The benchmark Nikkei 225 closed trading 0.8% higher. Overall, in Australia, the S&P ASX 200 finished 0.4% up. South Korea's Kospi wrapped the day flat at 2,012.22 points. In China, Hong Kong's Hang Seng gained 0.5%, while the mainland Shanghai Composite ended 0.4% higher. And the European Commission has proposed a new way of assessing whether companies are exporting at unfairly low prices. European Commission Vice President Jackie said the new rules would allow European companies to compete fairly with competitors outside the 28-member bloc, and that fair trade environment was important to its industry's competitiveness and job creation.
Trade policy is very important for modernizing European economy. It's very important for job creation in our continent. And that's why all the trade deals we managed to get through will help Europeans to get jobs. The simple principle is that 1 billion euros more export from Europe to third countries will create around 14,000 new jobs.
Now we will abolish that list and do a new country neutral. So we're not singling out China. This could go for any country. What we are looking at is whether there are distortions in a country or even in a sector. And that we will look at in a non-discriminatory way when it comes to countries. So this is the new proposal. So China is not a market economy. We're not granting it market economy status. If it were a market economy, we wouldn't have these problems with steel.
Now, a senior HSBC Holdings PLC manager has been arrested and charged alongside the former foreign exchange executive with engaging in a scheme to front-run a $3.5 billion transaction by one of the bank's clients. Mark Johnson, HSBC's global head of foreign exchange cash trading in London, and Stuart Scott, its ex-head of cash trading for Europe, the Middle East and Africa, were charged in a criminal complaint filed in federal court in Brooklyn, New York. Prosecutors say the executives, who are both British citizens, misused information provided to them by a client that had hired HSBC to convert $3.5 billion to British pounds in connection with a planned sale of one of the unnamed company's subsidiaries. Johnson, 50, and Scott, 43, used their insider knowledge to buy sterling in order to front-run the transaction, resulting in a spike in the price of the currency that was detrimental to HSBC's client.